China is one of the biggest drivers of oil prices. Their demand for energy has been super important. They've obviously been slowing. So I'm kind of been surprised that oil's held up as well as it had. Now it's kind of come off quite a bit. We're, West Texas Intermediate's down around 66, 65. So that's backed off a bit as well. But this is just, it's one spot that's interesting that you can kind of point to when you talk about U.S. domestic policy and those three areas and how they influence the financial markets. But also, of course, keeping to our theme here, how they add to the volatility of the markets. All right, so let's get to the moon. It was a full moon earlier this week. I hope some of you got a chance to see it. It's beautiful. Obviously, I don't know if it's a harvest moon, but it was spectacular here in the United States. And the weather's cooler, so that's great too. You think about the fall and every good thing that's going on there. And Halloween's coming up, and of course that's one of my favorite events here in the United States because it's all about candy, right? I don't know, chocolate. That's I love dark chocolate, so it's great for me. I don't know about you, Kevin. Yeah, good. Okay, so let's talk about fintech, right, and how it influences the markets. And I'm going to get into blockchain a little bit, but I want to give you just kind of a paradigm of what's happened over the last 15 years, why we're seeing more volatility now in the financial markets than we were, say, back. It's a different type of volatility as well. It's not something that happens over a long period of time. It's something that happens so immediately, and there's a reason for it. So this is really how this thing works. It's all about speed. So just cascading down in how things have progressed when it comes to financial technology. And just a side note, financial technology or fintech is finance. Finance is fintech. They are not different. They are the same thing, just to be really clear about this. But the digitization that began really in the 1990s, to some extent back when I was trading currencies myself, to where it really moved forward dramatically in 2004, that changed the world when it came to finance because it became online. You gained access to a lot of data sets. And that digitization led to, of course, electronic trading. We were trading across machines, not calling people on the phone to do trades. You're actually trading across computer systems. Well, that led to, of course, the development of algorithmic trading, or creating mathematical models to trade the markets. And when you develop widespread algo, of course, that leads to very fast market reactions, reacts, right? So that's how that's cascaded down. And that's why we see these tremendous bouts of volatility, in my opinion, because these markets don't wait around to react anymore. They react instantaneously. They all have natural language, not all of them, but many of them have natural language programming built into their models. So when the Fed releases its, name your report, like GDP, or actually that's the Commerce Department, but when they release their GDP report, if they program in, well, if it's below 3%, buy bonds, sell stocks. That's the kind of stuff that's there. No one waits around anymore. It's all pre-programmed in and looking for certain words, certain events, certain price movements. And not only is it that, but it's across all the asset classes simultaneously. That's your high-frequency trading firms. All they're looking for is just these little, avenues that they can take advantage of because of their speed, because of their size, and so on. That's our world. That's the financial markets now. That's the challenge for everybody that's in this room, is that's how fast these things move. Certainly for us, the chairman's mentioned, we're really trying to go as fast as we can from analog to digital, right? And it's really from digital to algo, because you really need those mathematical models to analyze the markets nowadays, right? You cannot just visually see anything. You have to have programs that run through it. And that's where we've gone to for a lot of what we try to do. At the same time, I just want to give a little shout out to Chris Ehrman, who was just up talking about the whistleblower. A lot of our leads for enforcement come from the whistleblower office. So I'm glad to see all the questions that you guys had for Chris, because he was great. And that office is super important for this agency. But this is the paradigm, this is the structure of the world nowadays, so I think it's just really, keep that in mind. Now, flowing from that, of course, one of the biggest, most rapid developments that we've seen just over the last 2 years is, of course, virtual currencies, right, and Bitcoin, and the use of blockchain and consensus mechanism with that. That's really the uniqueness of what has been developed. Peer-to-peer computing has been around a long time. Blockchain has actually been around a long time. It's that consensus mechanism that's been really unique in tying those three things together. So just for fun, I'm sure you've seen many charts of Bitcoin, but just as a reminder, we saw it shot up towards the end of 2017 when we had the futures contract come out. I was kind of chuckling to myself at the time because I saw what was happening with virtual currencies, and as the former trader in me, here at the CFTC, I can't trade it, right? I can't sell it or buy it or do any of that. And I was dying to, because I felt as soon as that futures market opened, it was going to go down. Anybody else have that feeling? I don't know if you watch this at all. The reason why I say that is because if you study these currencies and understand the structure within those currencies, right, and where they trade, you realize how hard it was to sell them. Oh, you could buy as much as you wanted to, right? I mean, depending on the price. But turning around and selling those, and selling them in a large amount, it was really difficult. So as soon as you gave that market the opportunity to sell in an institutional way, I felt that it was going to go down. Now, I didn't know it was going to do this, obviously. I just felt, as the former trader in me realized this was an opportunity. Of course, I couldn't take advantage of it. But that's what's happened. So now this market is flatlining a little bit. And we're trying to, I think everyone in the market looking at Bitcoin is trying to understand the dynamics behind not only the technology, but the use cases for it. And really the use cases for so many of the virtual currencies and the tokens that have been put out there. With that in mind, I just want to remind everybody how tiny this market is. The red circle up there shows, I think it was around, I forget what time of day it was. Where was that? Oh, it's just about 10 o'clock in the morning, right? For futures trading. Look how many contracts have traded. It's less than 2,000. Do you know how many contracts in the corn pit trade by about that time in the morning? Almost 40,000. Bitcoin is so tiny, right? And if we talk about market cap, right? Back at the peak was maybe $300 billion. Now it's like $200 billion. Right, the financial markets are worth about, in the US, I think they're $35 trillion. So overall, this is such a small component of what we look at here at the agency, but it gets a lot of news, a lot of energy behind it. And I think that's great, because there's a lot of fascinating things that are going on to this. I don't know how many conferences you guys have gone to besides this one. We had our own FinTech conference earlier in the month. But I've gone to a bunch of conferences recently, and every one of them has, that is interested in blockchain, and really the energy that you get to go there and see those people that are presenting, the entrepreneurs that are out there, and you realize the billions of dollars that are being poured into this space to try to figure out how to use it, it gets pretty exciting. And just this week, I think it was 2 days ago, what we call the ABCDs of agriculture, which is ADM, Bunge, Cargill, and I forget what the D is. It's LDC. Pardon me? Dreyfus. Oh, Dreyfus. Okay, I kept thinking it was LDC. It's Louis Dreyfus, right? LDC. Okay, so Dreyfus. Right? They all came out and said something really interesting, and that was